Hey everyone, welcome back to the channel. Today we're breaking down a huge market event that's making waves across finance, banks tapping the Federal Reserve for $17.25 billion amidst a dramatic unwind of silver short positions, and what it could mean for the markets, inflation, and your money. Stick around, this isn't just another price tick, this could be structural. Recently, several major financial institutions reportedly accessed a massive $17.25 billion from the Fed's Repo facility, basically borrowing huge sums of cash using securities as collateral. Simultaneously, the silver market, traditionally a small but volatile corner of commodities, is experiencing an extreme squeeze. Prices have surged to record highs. Some big banks that had bet against silver, known as short sellers, are forced to cover their positions at much higher prices. This is what analysts call a short squeeze. The video that started all of this discussion claims that banks tapping the Fed and silver shorts imploding are connected, and that this combination could be revolutionary for markets. Let's unpack why silver is especially explosive right now. 1. Weakening US dollar and Fed policy. Investors expect the Federal Reserve to cut interest rates next year, which lowers opportunity cost for holding metals. Safe havens like silver benefit. 2. Record price moves. Silver has surged over 130% year-to-date, significantly outperforming gold. 3. Supply and industrial demand. Silver isn't just an investment metal, it's critical to renewable energy tech, electronics, EVs, and solar panels. This dual industrial plus monetary demand fuels its rally. 4. Physical versus paper market tensions. Paper markets, futures and shorts, may be struggling to keep up with actual physical demand, leading to stress and forced buying that pushes prices even higher. All these forces combined have pushed prices well beyond earlier resistance levels. A massive short squeeze. Short positions, bets that silver would fall, are now deeply underwater. Banks that took these bets are buying back metals at higher prices, sometimes at a loss. In one example reported recently, a major institution is shifting from shorting silver to owning 750 million ounces physically, a staggering move. Liquidity and markets. Banks tapping the Fed's repo facility for large amounts suggests broad liquidity pressure in the financial system, and not just in metals. This isn't just a small repo tweak. It's one of the largest go-to moves seen outside of crisis years like 2020. So what does this signal? Banks under stress, liquidity concerns, hedging by large institutions, potential risk in leveraged positions. Some analysts argue the implosion of these shorts is indirectly forcing the Fed to support the financial plumbing to keep everything flowing. Let's temper some of the most dramatic claims. Not everyone agrees this is a systemic meltdown. Economists note that the Fed's liquidity injections are part of routine balance sheet management, not necessarily full-blown QE. Repo usage spikes can also reflect technical pressures like quarter-end movements or seasonal funding needs. But here's the key caveat. When a small market like silver shakes up big banks, it reveals how leveraged and interdependent markets are. This doesn't guarantee a financial crisis, but it highlights fragility. And the fact that bullion markets are touching all-time highs suggests that investors are pricing in uncertainty. So if you're watching this as an investor or just someone thinking about financial security, here are the big takeaways. 1. Precious metals may remain volatile, but important silver and gold often lead sentiment about inflation and real value. 2. Bank stress and liquidity moves matter. Big repo injections aren't random. They reflect broader market funding conditions. 3. Be cautious but informed. Episodes like this show why diversification, including outside traditional stocks, can be valuable. Alright, that's the breakdown of the banks plus Fed plus silver squeeze story making headlines today. If you want deeper analysis, hit that like button, and let me know in comments whether you think silver is entering a new era, or if this move is temporary market noise. Subscribe for more macro breakdowns like this. Until next time, stay sharp. Stay curious, and keep questioning what the headlines really mean. If you're watching this thinking, my retirement is exposed, I need protection. That's exactly why 401k Gold Group exists. We help people move part of their retirement into physical gold, securely, legally, tax advantaged. We'll walk you through the process, no pressure, no hype, just math. Click the link in the description or visit 401kgoldgroup.com and book a free consultation. And if you want more cut through the noise financial truth, hit subscribe, turn on notifications because nobody else is going to protect your retirement for you. You worked for your money. Now make sure it works for you, not inflation.